Hey, good morning, everyone. Welcome to the morning brief where we invest with military precision every morning. Bunch of exciting news today. We hit new highs yesterday. Some things are hitting new highs today. So very cool stuff. And we'll talk about that, as well as if you're catching this presentation on a recording and you want to check us out full time. Again, this is a group of fun folks that get together in the morning. You can get a free trial into the room where you can ask your questions and your chat. You can't see either of those on the replay, but that's how everybody communicates with each other. So I'm answering questions from stuff that I brought up as well as stuff the community brings in, and we talk our way through that every morning. If you want a free trial, reach out to me at steve@ototnow.com and I will get you all hooked up and you can check it out on your own. All right, for our mission objectives today, the rest of this will be a fighter pilot brief, basically, is we're going to grow our money, protect our money, and live off our money. Well, as you know, we are bouncing off for new highs in the S&P 500. We've already hit new highs in the NASDAQ. So really, we're talking about growing our money. Now, we are going to need to switch to protecting our money going into the election. But right now, let's just talk about the growth that we've had and where there's still room to move higher. So our specific tactical objectives there today, we're going to talk about Tesla stock, which is obviously insane, out of control, and only going higher to win above 1900 yesterday. It's closed a little below 1900. But other names out there that we're going to talk about, there's 4 other names, and then we'll talk about the SPY overall as well. For our question of the day, we're going to talk about what is the difference between trading and investing, and we do both in the morning. And we'll transition right now into our flow. So long, short, open, short, long. What that means is long is we're focused initially on investing. We're going to talk about major themes in the market, go around the world. We're going to talk about headlines. Then we switch to trading for just a few minutes right around the market open. We'll talk about names that that are in motion that meet our criteria, which again is 100,000 shares, and have gapped up or down at least 5% overnight. And you guys can put your things you want me to take a look at or things you think are in motion in the chat room, and we can look at those as well. Once we'll get all set up for the market open, and then we'll either execute a day trade or we won't. But after a few minutes after the market open, we back out of that trade and back into investing. So I'll talk more about what the difference later on, but certainly you need to know which one you're doing when you buy something out there. All right, as far as our flow, again, we talked market review, headline review. There's our names, including the index overall of SPY that we look at every day. We'll go into our execution, and then after the execution's done, we'll close out the chat window, close out the Q&A window, and then move on into question of the day. As far as contingencies, if you have any issues out there, reach out immediately to tech support at steve@ototnow.com. I have staff standing by to help you with your needs. And our standard disclaimer applies. This is an educational presentation, so make sure you do your own due diligence before you act anything on that you hear me say today. All right, let's go ahead and move up to the ThinkPipes platform, and we're going to take a look at the S&P 500 in 1-year review. So there's your 1-year chart. You know about the big run up going into the February highs, the drop off to the March 23rd lows, and then the run back up. But one thing I will talk about here that's interesting is how bear markets and bull markets are defined. I did not know this until last night, but obviously we've been in a long-term bear market going into the beginning of the year. The only thing I was saying at the beginning of the year was don't expect 2020 to be like all the other years. I had no idea of what what that would actually bring. But as far as you know, the market continued higher, we continued that bull, and then we had that 35% drop off between the mid-February to mid-March there, as you can see. Now that is, once you go past 20% down, that is officially marks a bear market. So the bear market started right around, if you want to put the cursor right around in the 20% down, right in here around what, March 10th or so. So that's when we're officially started the bear market. So where does a bear market end? Well, a bear market ends when you get new highs. So we're at new highs. So one would think that the bear market lasted from March 9th all the way to yesterday, but that's not true. A bear market, once you get new highs, that officially does mark the end of the bear market, but you go all the way to the lowest point of the bear, and that's what marks it. So really, the bear market was from March 10th to March 23rd, 13 days, shortest bear market in history. So now that we are back in a bull market, you would think we've been in a bull market for a whopping 1 day, That's not true. We've been in a bull market since March 23rd. So now it's August. So what's that? 5 months we've been in a bull market, which when you look at the move from the bottom higher, that's almost 50%. So, I mean, it's kind of crazy how far. Remember, when things drop a third, they have to go back up 50% to get to new highs. So kind of a year for the record books. And when we look back on investing history, there's a lot of things we can learn from a year like this. Now, what was different about this bear market? It was largely self-induced. Now, you can blame it on the pandemic. The pandemic obviously would have caused some issues, but had we not gone across the board and shut the country down, that basically caused it. So if had we not taken that actions, we would not have seen probably the movement in the market up and down, or down and then back up as we did. But hey, we'll see what happens next time we have a pandemic that affects 1/3% of the population or something like that. So just something to consider there. All right, let's take a look. Put in a QQQ into the ticker there and hit enter, and we will be off to taking a look at the NASDAQ. So as you can see here, obviously new highs a while ago, back in June, and obviously been a large move up higher from there. So a lot of movement north in the market, and that's why we're talking about what we are today. All right, let's click over. You can put SPY back in there and then hit enter, and then we're going to move over to the charts tab and take a look. This is the 5-day in the SPY that you can see. Look at the market open yesterday. That was kind of interesting. I said the words, hey, markets tend to hit records when they get close to them, and we've been trying to all week. And then look at that. We certainly have a huge sell-off going into the beginning of the going into the open there, and then you watched it over the course of a couple hours come all the way back up to where it opened, and then actually it closed in the green for the day. So kind of an interesting pattern that we would go all the way back up and hit our market highs after that kind of pretty big sell-off there at the beginning. So obviously on into the light purple there, you can see that the futures are kind of finding themselves. So we'll see what today holds. I will say that once we've hit the record, which we have, there's no real incentive for everybody to sit around and say all giddy that, hey, I wonder if we hit the record today. So a lot of people will be selling today. I would not be surprised by a red market. All right, let's click over to calendar. We'll talk about earnings. Biggest earning out this morning was Target, TGT. They blew out every number that they basically had, and some numbers that they didn't even have. We're talking at if you scroll down there, you'll find it. They're alphabetical. Find the TGT, and so there you go. Just click on that. So there you go. That's who we're talking about. We're talking about Target. I mean, their online stuff was amazing. Their in-store sales stuff was amazing. And one thing that was interesting that they said, which I don't know if this is true or not, but the CEO of Target said, and I'm blanking on his name right now, that he said that them crushing their numbers was not due to stimulus checks. It was more due to canceled vacations. I haven't heard anybody say that, but I have heard the predominant theme that all of us have been kind of stuck at home and people are spending money like fools. I mean, you would think everybody would be hunkered down. And of course, if you lost your job, then that would be a reason to hunker down. But for those of us that were only affected either slightly or in industries that happen to benefit from this, not being able to vacation has given us a lot of extra discretionary income. If you cancel a $4,000 vacation, well, then that money can be used for entertainment and buying stuff and upgrading things around the house. So it does all kind of make sense. So it was an interesting comment that the CEO of Target had this morning. All right, we can leave that behind, and we'll share out now the CNBC screen, and I will talk about the headlines around the world first. So what you see popping up right now, there we go, is the Dow futures. NASDAQ's actually turned into the red. They were all three green not too long ago. So with already some momentum to the downside, not a lot, I got that. But I do think people are going to wake up and look to trim risk today. I've been a touch early. I've been talking about taking risk off for over a month now, and I've done that largely across the board. So if your portfolio is not de-risked, I'm probably not going to de-risk it because I would have by now. But yeah, I think the rest of the market's going to kind of catch up with me here soon. We shall see. All right, let's click over to EU. EU is in the green across the board a little bit ago. Looks like that's holding. We'll go over to Asia. China's in the red, so take a look at that. China and Hong Kong a little bit in the red. China 1% in the red. I will say that I think, I don't know, but when you look at the head-to-head relations with U.S. and China, the market touching new highs in the year of a pandemic going into the election. Obviously, the Republicans and Trump are going to be trumpeting, if you will, that as far as, it was the 218th new high or something like that for Trump's stock market, which is very important to him. But going in, that may lead to the Chinese thinking, well, gosh, he may be getting elected. Obviously, that's not what you hear in the mainstream media. He has no chance if you listen to the mainstream media. But if Trump does get elected, obviously that's going to be bad for China. So I could see some of that getting priced in. All right, let's go to the next tab. We'll look at the U.S. These are the numbers from yesterday. And again, what we like to look at is the number over there on the VIX, kind of holding steady in the low 20s. Again, if we see a market sell-off, the VIX long trade is going to be where you would want to be today. All right, let's take a look at bonds that have inched a little bit lower here, but not much. Again, a lot closer to 0.7 than they were to 0.5 not too long ago, so pretty happy with that. We'll check oil, which is holding nicely above 42, even though it's off just a little bit today. And lastly, with the precious metals, I will pause here for a second. Is even though they've sold off a little bit today, I want you to think about something. So the NASDAQ has been blowing new highs blowing out new highs, for some time now, couple months. S&P just got to new highs, and precious metals are bouncing off new highs too. So why would that happen? Remember, they generally act opposite of each other. Well, if you've heard me say, which I like to, that money is like water, in March, there was a large portion of money that just went to cash. So what went down in March? Everything except for one thing did not go down in March, and that was treasuries, because that was the only safe place to hide out. So the market was crashing and gold and silver were crashing. Now they're both coming back up. So to a certain extent, they're kind of right sizing back to where they were. But if you hear the ugly I word, inflation, which you're going to hear a lot more about, I think if it doesn't get in the predominant news before the election, certainly after the election, we're going to start talking inflation and the potential impact of that. That's the case. When you have everything more expensive, housing market is up, unbelievably so, where I'm, locally here in Austin, but across the nation, housing is up, money's cheap, gold is up, stock market's up. When everything's up, guess what? That's inflation. So just think about that. That's something to consider, and we'll talk more about that down the road. All right, let's go back to the pre-market tab. We're going to quickly hit refresh here, and then we will go on into the headline news. If you want to, if you look down, or we're going to scroll down, you can see the big Target logo there. And there you see profits jump 80%, same store sales record. We're in a pandemic, right? And you're hearing these things out of a major retailer. So it's kind of crazy. I do think, as a tribute to Target's leadership, that they are an extremely well-run company. I'm been into their stock a little bit, but not a tremendous amount, because I prefer Amazon because of the vast scale of Amazon and everything else they do to make money. But certainly Target's pretty smart. They got rid of their pharmacies. They outsourced that to CVS. Kind of brilliant. So anyhow, just a great place to shop, and it's a little bit more expensive, but they command that because the demographic that goes there is willing to pay a little bit more. So good for Target. Congrats on the blowout quarter across the board. Also, right below that, you see Lowe's. Lowe's is hitting all-time highs today. I'm a Home Depot fan. I think they're best of breed and their leadership is better, but Lowe's has certainly been crushing it as well. And there's many portfolios where I have both in there. All right, let's go ahead. There's J&G headline. We'll see if that moves the stock here a little bit. I did take a question this morning from a client about, hey, is now the time to refi? Well, mortgage rates can actually go lower. They don't, interest rates are at an all-time low, but mortgage rates are still a supply and demand sort of thing. So everybody that hopped in early didn't quite get the absolute lowest rates because there was so much demand. And that 30-day closing, folks aren't meeting that. I mean, it's like a 6 weeks close on a refi. And the one guy I use here locally in Austin, he's emailing me at 9:30 on a Saturday night about work stuff. So I mean, literally saying almost working around the clock to meet all the demand that's out there. Remember, when demand finally tapers off, and the majority of folks that have refied, that are in the position to refi, have done so, that's when you'll get that all-time bottom in rates. So if you haven't done so yet, I would just hold off a little bit. I was telling my client, let's wait till November or December and reassess, and then maybe we get those all-time lows. But again, any rates you get at this point in time is going to be fantastic. But you're just trying, if you're holding out there for a little bit lower, you might be able to get it here later this year. All right. So I like a term there that I see. We'll put that right at the top of FOMO. So that's fear of missing out. So why do people just buy into all-time highs? So the stock there is NVIDIA, but you can certainly ask yourself about, do I buy Lowe's today? Do I buy Tesla today? Amazon up 4% yesterday. 4% in Amazon, that's hundreds of dollars, right? So it is literally, why would you buy into stuff like this? Well, it's the fear of missing out. It really is. So, all right, that's enough for headlines today. We'll cut that a little bit short. We'll head over to FinViz to talk about our market leaders. So here's Tesla. You know my take on Tesla, but I do have to sit back and just give Elon Musk and his crew of workers a golf clap. And obviously, they're moving here in Austin, which I'm thrilled about from a tax perspective and, jobs and everything that Tesla brings with it. So thrilled about that. But look at that stock. I mean, that's kind of crazy. We're talking mid-August, it's at 1,400, and now it was above 1,900 yesterday. Yeah, quick math, $500 per share. Wow. So when we talk about reversion to the mean, you're not looking at a reversion line there, kids. You're looking at an all-time high line that's being put there on the chart. If you were to look at a true reversion line, it's going to be cutting it in half, if you will, and meaning even if the stock price was supposed to go up, it would only be around like 1,650, 1,700, not up where it is. So I think a lot of these stocks are going to come in. If you look down to performance of the year number, if we can put the mouse around that 730, 3194, I mean, 731% on Tesla. It's insane. So stay away is the only thing I can offer you there. All right, let's go. And the stock split's coming up at the end of the month. So people probably aren't selling. So it's probably going to hold or stay pretty lofty until after the stock split, and then it's going to sell off. That's my take. I've been wrong in Tesla. Do what you want. All right, let's go over we're going to share out the Schwab Street Smart Edge platform and take a look at 6 names here. You obviously have Tesla to the upper left, and then you have which you've already talked about. Then you have Amazon. Amazon again above 2,000 there. We've got lucky if you bought Amazon around that 1,600 level, which was kind of the biggest note when I look back on, as I debrief myself as a money manager. When I look back and go, what did I miss? Well, I missed Overstock.com. Yeah, I missed Tesla. Yes. What did I get right? Apple, Amazon, basically everything you see on this board was a big buyer of. And still believe in a lot of it, except for maybe Facebook. I think Facebook might have kind of run its course, if you will. Okay, so you have Amazon, obviously $3,300 a share with the big move up yesterday. I don't see that selling off too much like Tesla or Apple will. I think Apple, same thing. I think it'll profile like Tesla, is a lot of people aren't selling until after the split because you magically have 4 times as many shares. So then, I could see people selling a fourth of their earnings, like, well, I had 1,000 shares of Apple, which is, oh, by the way, $462,000. When I was, you heard me talk, if you've been with me a long time, about 4 or 5 years ago, I was trying, saying everybody needs to have 1,000 shares of Apple back when it was like $92 a share, and I was making the race. Well, pretty happy for all the clients that do have the 1,000 shares of Apple, because it's kind of a game changer sort of number. That's closing on $500,000 if you do. So good place to be. Hey, if Apple sells off 20%, don't even sweat it. I mean, it's ridiculous. Look how far it's come. It's like, whatever. That would be I would not even be concerned in the least if Apple sold off 20%. Now, you're going to get excited when you look at your net worth number and your portfolio value, but 20% sell off, don't worry, it'll come back. All right, Facebook, where I talked about. Microsoft is the one that I kind of got in late. I was not a big buyer down when it was at 140. I waited till about 180 or so, and then I realized, yep, Microsoft is still on the cutting edge of technology, unlike some others that have been left behind. IBM, Intel, unfortunately, is getting lumped more into the old tech than it is the new tech. I'm not sure that's fair, but it is what it is. And then lastly, of course, if you're in here, most of you are individual stock type investors. However, if you want to own the index, again, close your eyes, buy the SPY. That's not a bad way. Buffett says do that until you have at least $100,000. I kind of disagree. I think you should get interested in individual stocks earlier. But certainly, if you don't like the way the individual stocks move, close your eyes, buy the market, take the coaster ride, and then don't talk yourself out of your game plan just because the market moves down 35%. Because look, there it moved down and it's right back up. So got to hold on to the coaster sometimes. All right, let's talk about, we'll go over to the next new layout tab and talk about some names. Obviously, the first one I want to take a look at is the, let's look at Target and the earnings that we have. So TGT, please, in that screen. And then we will. So the volume, 2.2 million in shares, yep, that was 2.25 million. From 137 up to 148. This meets every criteria for a long gap. I don't really want to go long today, but if you're going to take something long, Target is your guy. Go long. It'll be the number one long today. Does it have room to move higher? It really does. It is really, from a PE ratio. I want to look at the PE, put TGT and the FinFizz here. I want to take a look. Nope, you don't need to share it out. Just cancel out of that and then click TGT right there. All right, I'm just looking at it on a different screen, so you're not seeing this, I am. 25 is the PE, forward PE of 20. Not even overpriced really in relation to the market. It's still underpriced. So TGT long is going to be our top option there. All right, for some shorts, let's look at KODK, which is Kodak. We're back up here now. KODK, we'll type that in. Again, this is they've gotten in trouble for the big contract. They've already lost the contract. The stock has been kind of selling off. So it's showing that it's gapping up there, but we're going to be looking at it from a short perspective because there's a lot of legal stuff coming out. So we'll just keep an eye on that. That'll have to open, and we'll see if it's on the downside there. Let's look at SRNE, which is Sorrento. We've obviously followed this name. They fired their CFO either last night or this morning. There you go, 8/18. So it was last night when they fired their CFO. So from 1228 down to 1145, I think that's a 7% gap. So it is a plenty of volume, $3 million shares, heart of the envelope short for exactly what we're looking at for SRNE. Next one we'll look at is a smaller name, Jack Henry, JKHY. All right, so there's Jack Henry, closed at 197. Now they beat earnings, but they missed on revenue pretty hard. So again, this meets our criteria for that 5 to 10% to the downside. So pretty thrilled overall. The issue with Jack Henry is volume. You see 706 shares there. Its average daily volume is right around 100,000 shares. So it doesn't meet that criteria at all. So if you would hop into Jack Henry, do it in a small amount, like a couple hundred shares. You would not bring out your big bat and take a swing at this thing, but I think a small bat swing is appropriate for Jack Henry there. So again, they guided down significantly. So the stock, if you can roll out a little bit to bring up a longer screen, there you go. Very nice. You can see it's kind of run up big, and so it has a lot of room to fall, is what I'm saying with Jack Henry. So we'll have that up there as well. Okay, let's look at our tabs real quick. Momenta Pharma, that's appropriately named for being up 69%, right? That's kind of crazy. So we aren't touching that. There's our Sorrento, already down at 8%. It was at 7 last time I glanced at it. So again, heart of the envelope short. So that'll be our number one thing to take a look at. There's Target gapping up. That's our long that we're going to take a look at. Both plenty of volume, both right in the middle of it. I'm not going to talk about those other two pharma names. There's our Eastman Kodak. down here. We don't need to pull the chart. We already did, but I think that's going to roll over and go red, so we'll keep an eye on it. Let's go to the next tab. Right, there's lows up 2.27, so not quite enough to take. Nothing else meets our criteria. Let's look at our decliners. JKHY, it's heart of the envelope, but low volume, 700 shares, but I think it's going to drop like a rock. Let's look at our next tab. Target, yep. Everything else below target is light volume there. So we'll take a look at the last tab and then we'll get set up for our opening. Accelerate Diagnostics, I did see they're a long AXDX. We don't need to pull the chart, but that's an earnings. I saw that earlier today. That's heart of the envelope, but low volume. Almost, it's getting closer. And then Grow Generation, GRWG. We've looked at this a couple of times. That would be another long option. Not quite gapping up where we want it. But all right, let's leave the Schwab platform behind. We're going to go up to TD Ameritrade and we're going to set up our trading windows. And for your trading tickets, let's go for the home gamers. SRNE is going to be what you want. So we'll get things set up here. Obviously, you know that on the left, close out that bad guy right there. All right, we're going to keep SPY on the left. Just pull it down maybe off our screen. There you go. All right, on the left, ooh, DraftKings. I like that name, but that's not what we're looking at this morning. We are going to go short, short, long. Actually, go long, short, short. So let's put TGT in that left window. You click on it there. We'll get TGT put in there for everybody. So it's going to be long on the left. And then in the middle, it's going to be SRNE, which is our top short. And then on the right will be JKHY. So SRNE. Again, that's Sorrento. So we're looking short. Perfect. And then on the right will be JKHY, which you'll see that it has a low volume, or not any volume because it doesn't trade pre-market. So that's why we'll watch for the volume to rush in there. We'll let that chart will pop alive. Okay, for stops, we have about a minute to go. For target long, obviously you want to cover that 147. So in a perfect world, the stock would drop down to 147 as people take profits, and then that will turn higher. I don't know if that's going to happen or not. I don't know if it's going to sell off, but realize if you took it right here, you'd need a $2 stop. So just you would have to cover yourself down to 147. It'd have to go up to 155. I don't know if it has a full 155 move. We shall see. And then for Sorrento, that's one I'm more excited about. We could take it anywhere in this 11s area. There's no way we're going to cover up to that 11.9. So get ready for about a 40-cent stop. 30 if we can do it in Sorrento. So we shall see. All right, 30 seconds to the market open. Here we go for today's plays of the day. You see 4 screens on ThinkPipes here. On the far left, we have the SPY, so we can see the overall trend in the market as it opens, which I do think will be red today. We shall see. I'll refer to the other 3 panels as left, middle, and right. And on the left panel, we have target long after earnings, crashing earnings. In the middle panel, we have Sorrento short. And on the right panel, be patient, we have Jack Henry short, which has low volume. So here we go into the opening bell. Ding, 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 there it is. And you see the chart popping alive on Jack Henry. We'll just sit and watch that. So get your tickers and everything ready for that Sorrento sell-off here. So I'm going to think about taking it pretty quick. Let some volume kind of rush in. Almost 1 million shares. I would love if it backed up to 11.8, but I don't think we'll get that. So let's, in your mind, have 11.4. As if it drops to 11.4, we're going to take this trade with a 40-cent stop. Okay, this is a good thing. So 11, let's go 11.5. If it hits 11.5, then we're going to get in. So there we're in. So we'll draw the line at 11.5, and you're going to use a 40-cent stop. So 11.5 for the entry, and 11.9 is our stop there. So we're going to draw a line there at 1150. We'll get that in for you, which takes it down to 1030 for our 3R sort of range, 1110 being our first R. All right, so there we are in the trade. You see that? There's our stop in, so have that set in case it stops us out. And then there's your big arrow on there. All right, so we're in the trade, so we're just gonna let that cook. For Jack Henry, let's look at the volume. Still only about 25,000 shares, so not enough really to take. All right, and let's on target. Not really seeing a whole lot of movement long there. Not super excited about that. Let's wait on target for just a few minutes. I would like to see it. Looks bad for our Sorrento trade, so can't tell if it touched it or not. You'd know from your ticker whether it hit or not. It looks like I see a little bit of space between there, though. See if that may be where our line's drawn to. So anyhow, you may or may not be out of that trade depending on what exactly it hit there. So check your tickers. If you're in the trade, I'm thrilled. If we got knocked out, obviously you're down an R, and we will call it a day in Sorrento. But if you're in it, I like it. We'll see. Another thing that's kind of instructive, if you look at where we put the stop at 11.9 with the previous market high of 11.92, I'll take that as an error on my part. We should have put that stop up at 11.95 because you can see things. Ooh, look at target selling. It's kind of an eye catcher. And if you look all the way to the left at the market overall, it's kind of striping down red. If we can zoom in on the market all the way on the far left there, kind of get a little closer look at that. Kind of have to roll to the right there to get to those red bars. Sorry, the other way. My bad. I misspoke. There you go. So you can see the movement down. So back to the Sorrento thing about the stop. I probably should have had 45-cent stop there to cover that previous market high, which is really where you want to. There's a lot of traders that'll be right there. So we'll see how we are there. All right, as far as Jack Henry, we are seeing some movement in Jack Henry. So don't take a big portion of this, but let's go ahead and take it. Let's take it right here at 183.35 short. So over on the right screen, let's get in 183.35, and we're going to put a decent size stop on this. We'll put a $2 stop on it. So up at 185.35 will be our stop. And again, this will be short. This is one you're probably going to be just letting cook all day long. So we're going to draw 183.35, draw that line across there. Right here at the 183.35, and then you have that's the stop line up there. So we'll get our drawing sort of figured out here. So 183.35, there we go. That's close enough. That's our entry point, and we'll get that drawn in there, and we will get the arrow down to show you that that's a short. So right now we're in these two trades. And again, you'll have to see if you got stopped out of Sorrento there when it went up and touched 11.9. All right, let's try to get our upper stop in on Jack Henry. It's 185.35. So give it a shot at the line there, and we will call it good, 185.35. So right in here, there you go. All right, Sorrento dropping nicely. And target's kind of hanging in there. Again, not really setting up for that big long, so I would not take target long at all. So you're either in or out of Sorrento. Don't know with that touching the, there's our line in Jack Henry. Very nice. Let's go over to Sorrento and give me a line at 11.10. That's our 1R point in Sorrento. So 11.10, we'll draw a line. Again, that's our 1R. And to get to that second R, we'll be having drop off of the chart. So we're 5 minutes into the day. We've got, again, the trades in Sorrento and Jack Henry. In Jack Henry, let's go back to the right, our 3R point is going to be one. It's going to be off the chart, so we don't need to draw it. 177.35, but our first one would be 181.35. Would be 1R, so 181.35. There you go. That's to be the 1R point in Jack Henry. So we get that drawn in there. We'll draw kind of a little 1 across to that, so you know that that's the 1R point. And just a vertical line right there, make a 1, and that'll be good. All right, perfect. So we'll leave those two. We'll just leave those cooking, and we'll look at target. All right, in that left screen, we're going to get rid of target. It is going back higher. I wouldn't take it for a trade here. I was looking away. If you're going to take the trade, it would have been down to 147 or 4 or so. You do see the market kind of popping back up. As far as the market on that left screen, either zoom out or scroll it to the right so we can see the green bar that should be all the way on that left panel. Let's go right here on this panel and try to move it to where you can see the green bar, because the market's going up there. There we go. Auto zoom gets our friend, and then right back in. There we go. Sounds good. All right, so we're where we want to be. What we're going to do is we're going to take a look on that target screen. There you go. The target screen. Let's go ahead and put some other names in there. AXDX is a long name that we'll take a look at. Again, this was an earnings beat. So up 5%. Yep, and right on into the zoom if you can make it happen. We'll get that done here in a second. But yeah, as you can see, it's up 5% or so. Kind of holding in a range there, 154 to 157. So there's our zoom. So yep, not a whole lot to look at there, and kind of low volume on AXDX. Another name we'll take a look at is GRWG. It'll be GRWG, and we'll get that pulled up. Again, this is a name we've talked about for a couple days. Up 5% or so. Zoom if you can. There you go. So you see it opened down at 187, kind of went up and down, traveling about within a range. So not a whole lot of movement there, not enough for a day trade. All right, updating our trades, both Sorrento and JKHY are at an R. Yeah, I love that JKHY trade. I do think we get a full 3 Rs out of it, even though it's low volume and not normally what I would want for a trade, but that low of a volume, but it's got no reason to go higher in my book. All right, let's in that left pane there, let's take a look at some other names. Let's take a look at Tesla, TSLA. All right, holding steady below 1900 there. Another name we will take a look at is, let's see how Apple's doing today. Apple AAPL. It's AAPL, a little bit of a tricky one. Ooh, Apple's up nicely in the green. I like that. If you look at the market off to the left, you can see the market's now back in the green for the SPY. So that takes everybody into the green. The Dow's up 1/3 of a point, NASDAQ's up 0.1, and S&P up 0.17. So both trades are working. We're going to leave the trade screen for a minute and go to the chart screen. So click on the charts tab for us. And we're just looking off to the left there for our big names. EPWCF, that's a very small name, jumping 30%. Target holding nicely at the 9% up. Clickstream and play a little bit. Again, big news expected out today as far as they have a TV channel and an app. And it's a penny stock, but it's we'll see, something to keep an eye on. Got Workhorse up, that's a name we like. LCA has been up 3 or 4 days in a row. That's the Golden Nugget online gaming. Delta Airlines and Southwest up a little bit, and then Nikola up a little bit. So lots of names in the green, and again, markets overall in the green. Let's click on that tab that you're on right there to take us to the red names. You've got a Kohl's call that's down, which means Kohl's must be down. I'm scanning for the ticker. I don't see it offhand. There it is. down 1.30, about 10 down. JKHY is Jack Henry. That's the trade that we're in on the trading screen. Sony selling off a little bit. Sony is a fantastic holding. Sony has so much long-term potential, and they of course have the PlayStation 5 coming out, right? So that's going to literally walk off the shelves. It'll be the home run for the Christmas season. If you don't have one, then you should be getting one, right? So that's why Sony is a great name. Somebody just blew out of a huge position. I can't remember who it was, but it was one of the billionaire folks that are out there. So let's click that again, go back to the green. Again, not much movement there. And let's go over to the trading OTOT chart 2 and update our trade. So down at an R for Sorrento. And then Jack Henry's backed up a little bit. So we'll kind of leave that up there and look at the market again, flopping back red. So folks are quiet this morning, so nothing to really talk about in the chat or the Q&A. So I'm going to get set up for our question of the day. Today's question of the day is, what is the difference between trading and investing? So you need to think about, when you buy something, is this a trade or is this an investment? Now, with a trade, you are trying to buy something and then sell it to somebody else for higher. If you are investing, you are trying to buy something and then holding it for it to increase in value. So let's take a non-stock example. Let's talk about, say you're into sports paraphernalia or baseball cards or whatever it happens to be, or a Mark McGwire jersey or whoever your favorite player is. If you buy something, if you go to a trade show or so, however it is, you go online and you acquire something. If you are immediately listing it for sale, that's a trade, meaning I bought it for X and I want to sell it for X plus, another percentage of X. So that's a trader's mentality. So if you are value investing, if you are saying, oh gosh, look how cheap the airlines are, especially, not necessarily anymore, still kind of cheap, but if you were now translating into the stocks, if you're basically dumpster diving, if you will, is what I call value investing, or looking for cigarette butts is what Warren Buffett calls it. If you're a value investor, you're really looking to buy something dirt cheap and then looking to sell it when it gets close to its actual value. So considering that, that lets you know whether you're in a trade or investing mentality. So we've been talking trading. Now, if you're thinking investing, now you're buying something because you want to hold it for a long time. So if you buy that, say it's the Mark McGwire jersey or whatever, say a share of Apple stock, at that point, you aren't looking to sell it. You're looking for it to increase in value and add to your net worth. So you're going to hold it, and you may not have a price to sell it. Now, if you buy your Apple shares at $90 and now they're at 460 today, you may think, okay, well, yeah, it is time to sell that. But if you also think that Apple is a best of breed company, it's tech, it's also luxury, it's a must-have item with a highly addictive product. They have highly addictive services out there. Basically your iTunes and your family sharing cloud-based 2 terabytes for 99 bucks a year. I mean, all those things, once you start them, you're just not going to stop. So that's more of the, even if it's moved up 5 times your initial investment, you may not actually sell it because you want to continue to have it appreciate. So that's more of an investment. If you think of it in the housing market, if you are flipping a house, that's clearly a trade. You're buying something dirt cheap, putting some money into it, some time and effort into it as well, and then you're looking to turn around and sell it for higher. If you buy a house in a good neighborhood with good schools and you want to live in it for 10 years plus, well, that's an investment. And while you're living there, the house is going to appreciate in most markets, and you can sell it for higher later on. But so that is kind of the difference. So when I think of buying and selling, you want to make sure when you buy something, and there's only one reason to buy, and that's because you think it's going higher. There are all kinds of reasons to sell. So one of it is because you hit your target. If it's a trade and you buy it And if you buy something at $9 and you want to sell it 10, it could hit 10 that day, and then you sell it, right? What you don't do is turn a trade into an investment, which you bought it at 9 and you said, I'm going to hold this till it hits 10. It hits 10, and then you go, oh, well, it's in an uptrend, so I'm going to hold till I'm just going to hold it. Well, then it falls back off or whatever happens. It's like you turned a trade into investment. You don't want to do that. So before you buy something, kind of have an idea of what you're going to do with it. So how I relate this to investing is, if you, and this is like Tesla stock, which is hard to buy right now because it's so high, and I think it's going lower, but I can't guarantee that. If it's a must-have for you, buy some. And I ask clients, it's just like, if you buy a Tesla share today at $1,900 and it drops to $1,000 tomorrow, how does that make you feel? Well, on one side, you just watch an investment get cut in half. So that's not going to make you feel that good. But if the overriding feeling is you're excited because now you can buy more shares at half off, then you get it. Then it's an actual investment that you actually want to be in. So that's a way to kind of test yourself as far as, why am I buying this? But I see folks all the time that will hop into something and go, oh, I need some of this, but they don't really have a plan as to when they're actually going to sell it. And it's okay to be a never sell type person. And that's the case I'll talk about lastly. But have a plan for when you're going to sell it. Why did I buy it? Why am I going to sell it? And then if you need to adjust the plan, that's fine. You've all heard my Facebook story where I bought it at 17 after the IPO and it cratered. Bought it at 17, sold out at 33, bought it back an hour later at 34, i.e. lost, left $1 on the table there because I sold it and then I bought it right back because of everything Mark Zuckerberg was saying in the conference call. That changed everything. It really did. That brought Facebook from a social media company, where it was, the original origins of Facebook, to something that's going to be around forever. So that's the buying story. Now, there's sometimes when you buy things like Apple stock, say you got in at 90 and you bought it in your taxable account and you have 1,000 shares. Well, if you bought at 92 and you bought 1,000 shares, that's $92,000. Well, right now, today it's at 460, so it's $460,000. If that's in a taxable account and you sell it, you are going to owe taxes on $370,000 of capital gains. Albeit most of it's going to be tax favored as long-term capital gains. Tax favored now, we'll see after the election. But realize you may be in a position where you kind of can't sell. Now, there's other strategies we've talked about with covered calls and hedges and things like that we're not going to get into today. But certain investments, you literally can't sell because you don't want to pay the taxes. So you're going to basically hold them until you die. And when I first talk to folks about it, it's like, oh, that's run up so much, you got to hold that till you die. They kind of look at me like, what? And it's like, well, here, let me show you your tax math, and you may not want to pay all those taxes. And that's why you don't care if Apple's run up and then it comes back down 20%. That's all part of the roller coaster motion of the ocean. Now, why would you hold it till you die? Well, current tax law, and it's been this way for some time, is assets, when you pass away and they transfer to somebody else, the cost basis has stepped up. So in other words, those Apple shares you bought at 92, they're up at 460. If you pass away today and then the stock transfers, is whoever receives that stock, now their cost basis is today's price or 6 months in the future, which is more favorable. It's more CPA stuff, but nobody has to pay taxes on all of that. So there are times when you get things where you can't sell. So to conclude, what's the difference between trading and investing? As soon as you acquire something, and you're turning around and trying to sell it, well, that's a trade. If you acquire something because you're wealth building and you hold it for a long time, or you may hold it till you die, that's certainly investing. Anything in between, just have a plan for what you're going to do. So that's all I have for today. Please reach out to me through ototnow.com with any questions or comments. Thanks again for joining me, and here's to you fighting the good fight every day to be on time, on target with your financial goals. Thanks.